Over the past 2 months, the market has seen a severe correction from its high here in February of 2025. And then Trump started to implement his tariff plan, and it decreased significantly, hitting that low of around 4,832. Now the market has started to regain strength, almost reaching the levels of the all-time high in February of 2025, primarily due to Trump's negotiations with China as well as the UK. A lot of optimism is now flooding into the market, and a lot of investors are now saying that we could possibly reach that level that we saw in February of 2025, breaking the all-time high. Now, I made a previous video on this, but I believe that the damage that tariffs had are going to hit Q2 earnings very significantly. I do think that we may be able to break that all-time high, but once Q2 earnings comes out and companies start releasing negative earnings, primarily the Magnificent Seven, I think the market will start to decrease. Now, the CPI did come in somewhat flat, and the economic indicators are showing that the economy is still holding strong through these tariff plans. But Trump is set to continue his tax plan that he did in 2017. In this article, it states President Trump has called for a permanent extension of the 2017 tax cuts, additional policies including no taxes on tips, overtime pay, and Social Security benefits for retirees. Now, all of this is fiscal policy. So tax cuts begin to be implemented. A higher profit margin is then accumulated through businesses as they have to pay a lower income tax and a higher stock price. If we look at this chart here, the United States sits pretty low compared to the G7 countries for its corporate income tax, and it sits at 25.8%. Now, in 2017, when Trump initially enacted that TCJA, the Tax Cut and Jobs Act, the stock market benefited a lot and increased a substantial amount. His first presidency, the stock market boomed as investors were really pleased with how corporations are now paying a lower income tax, which thus increases their profit margin and makes them more profitable. So it's been a rocky first couple of months for the stock market during Trump's second presidency. Although I believe that once this Job Act does get extended, I think the stock market will benefit greatly as we saw in 2017. Like I said, I do believe that when Q2 earnings does release, I think that there will be a slight drawback, but a lot of future growth in the future and for the rest of Trump's presidency with this Jobs Act and corporations now making higher profit margins and more profit. If we look at the RSI here, we hit that low of 4,837, and it was very undersold. And now we are reaching levels of possibly maybe oversold. So that correction was needed, and the market was very overvalued before we saw that correction. Stocks are now somewhat undervalued. Consumer cyclicals are very undervalued as they've been hit very hard with these tariffs. I think this is a great buying opportunity. Now, this video is not to take sides, but I do believe that the market will benefit greatly over the next 3 years for the rest of Trump's presidency through this Jobs Act, as we saw in the market in 2017 when this act was first enacted. So thank you guys so much for watching. Be on the lookout for new videos every week. Drop a comment, subscribe, and like.